We will get started. Thank you so much, everybody, for joining us for our monthly webinar, 401k Audit Best Practices. My name is Jenna Witherby. I'm one of the advisors on the team at 401k Plan Professionals. And on behalf of all of us, I really appreciate you taking the time to be here and learn more about 401k plan audits. As you know, this is a part of our webinar series. Over the last several years, we've liked to open up the line and just hear from other professionals in our industry, co-host, and give you a variety of different topics and different information to learn about. And we shoot to be done in 30 minutes or less. We understand that you're busy. We have more webinars scheduled for the remainder of 2023. I'll give you an overview of that at the end. If you would like to watch the recording or pass this along to anybody else, or maybe you want to refer back to this in the future, the recording from today's session will be on our website and also on our YouTube channel. So feel free to share that with others. You'll automatically get a recording afterwards. And as well as our past webinars as well, those are all held online at our website, 401k Plan Professionals, and on our YouTube channel. So today I have two panelists with me. I really appreciate them being here and just sharing their expertise with us. One is Vicki Nelson. She is a manager at Boeckermann, Grafstrom, Mayer, and she's experienced at providing audit and assurance services to clients in a wide range of industries, along with preparing audits, reviews, and compilations. Vicki is also experienced in the complex work of performing employee benefit plan audits, which is what we're here to talk about today. So she ensures that a company's employee benefit plan is within the guidelines and regulations set by both the IRS and the Department of Labor. So really excited to hear from Vicki. And then Kris Tveit is a CPA at CliftonLarsonAllen. She has over 25 years of experience in auditing employee benefit plans, including defined contribution, 401k, 403b, profit sharing, money purchase plans, ESOP plans, defined benefit, and health and welfare plans. She also consults on matters surrounding ERISA regulations that govern employee benefit plans. Thank you so much, Vicki and Kris. And for the audience, just to let you know, today we're going to be keeping this pretty interactive. We have several polls that I want you to answer as we go through. They don't take a long time. You don't have to think too hard, but we just want to get an idea, kind of a gauge of where people are at. So please participate in those. So number one, before we dive in and get started, have you participated in a 401k audit before? So this could be you yourself had to provide data to the auditors. Maybe your plan doesn't need an audit yet, but you think you will. So just wanted to kind of see where people are at in terms of their experience. We'll just give it a few more seconds here. Okay, so most of you, about 2/3 of you have participated in an audit before. And I know there's several people on this call that perhaps their company doesn't need one at this point, but maybe it's coming in the future, or just overall want to stay in tune with what the rules even are. Okay. So let's just go to the beginning. So Vicki, if you can kind of walk us through what triggers a 401k plan audit?
All right. Good morning. So what triggers a 401k plan audit? In 2022, if the number of eligible participants, whether they are participating or they are not participating in the plan at the beginning of the year, is over 100, then an audit is required. But there are big changes coming for next year, 2023. They have switched it up from the number of eligible participants to participants with account balances at the beginning of the plan year. And if that is over 100, then an audit is required. And note, if it is an initial audit in 2023, because you've never been audited before, you will not, of course, use the beginning of the year because you will have zero balances, but you will use the end of the year account balances. Sorry. And also remember that automatic enrollment is for newly formed plans. And do I need an audit? So I'm just going to recap the blue. Have you ever needed an audit in the plan years and previous? If the answer is no, then once you reach 100 eligible participants, you are required to have an audit. Or if you are filing already as a small filer, then you have what's called an 80-20 rule or 80-120 rule. That means if you hit over 100, you can determine if you would like to stay as a small filer or do a large filer in which an audit is required. But once you reach the 120 eligible participants, then you are required to do an audit. Question then, but if I drop down to 95 at year end and I'm doing an audit, yes, you can stop doing a large audit. You can drop back to being a small filer and not doing an audit. So when does the plan stop requiring an audit? The eligible, active, and terminated balances must fall below 100 on the first day of a plan year. You can still, however, elect to file as a large plan, which requires an audit if you still have over 80 participants. And again, this is beginning in 2023. The audit requirements will be based upon employees with account balances as of 1/1 of the beginning of the year.
And I know this is a positive change for most companies because in the past they had to include, terminated people with with balances still in the plan, or say beneficiary accounts that are still in the plan. And if they're over a certain amount, you can't force them out. So sometimes just lingering past participants were and eligibles that were not contributing were forcing that number to be higher. So
correct.
Yeah, this is a nice change. I think it makes sense.
It makes sense. So number 2, the second polling question, what is the number of eligible participants that trigger an audit for an existing plan?
We're quizzing you. See if you're paying attention. All right, just a couple more seconds. Okay.
All right. So for an existing plan, it is 120. But if you are a brand new plan, what triggers an audit is 100 eligible participants for 22. All right,
Okay.
do we have another polling question? Oh, nope, sorry. All right, Kris.
All right, Kris. So now let's move into best practices for audit preparation. So an audit's coming. What are things that plan sponsors, committee members can do to make sure that things go smoothly?
Yeah, great question, Jenna. And I would have to say it's pretty basic. It really comes down to communication between the auditor and the client. And in my experience, the biggest barrier is not being prepared for the audit. And that can go on both sides. It can be the client just isn't ready after getting all the requests, that just creates disruption. And also the auditor, if the auditor isn't prepared. So it's a two-way street. So really the best recommendation I have is really having a robust planning meeting between the plan sponsor and the auditor to go through all the requests, what's going to be needed, come up with your committed timeline so you know what's due and when, and everybody's on the same page. Those audits go the smoothest when everyone's agreeable to what's needed and when it's going to be available. And then having it ready, of course. And then I think the key thing on audit findings, and I know Vicki's going to cover that in a little bit more detail, but really the big deal is having good controls over your remittance process and your onboarding process. That covers like the eligibility side of things. And so if those on the call today that aren't subject to an audit, I think even if you're not subject to an audit, having great controls over your remittance process, how the money is getting over to the record keeper and custodian, and then the onboarding process is what controls do you have in place to make sure you're monitoring eligibility dates like data hire, date of birth, date of term, getting all of that because that drives the plan process and will help mitigate some of the findings in the audit cycle. So that's the key there. And then if you're a first-time audit, you definitely want to be proactive in working with your auditor to understand what's needed. There's some unique things that need to be done in a first-time audit that don't carry forward in a subsequent audit that you just need to be aware of because it's digging back on some older information as well. And then another key thing is the auditor access. Most record keepers have this available nowadays, and it's a access that you grant to auditors that is view only. We can't edit or change anything in the system, which you don't want auditors doing that, but it really helps facilitate the audit where we know auditors generally know exactly what they need, and we can minimize requests to the client and just make it a nice streamlined process. And we can download reports that we need versus having the client go do that. So it removes, just lets us go direct and helps minimize things.
Right.
And then I guess some other best practices, if you have issues that come up during the year, I recommend always reach out to your auditor. Your auditor always welcomes having that discussion on how do you fix something, or I came across this issue, what should I do? How does it impact my audit? And then we're aware of it in the future years. Like, oh, you had some late remittances. Let's prepare for that. Let's talk about getting it corrected now versus waiting for us to do the audit 6-9 months later and it's carried on. So that's important. And also when you're looking at maybe changing your service providers, talk with your auditor, find out, do you have good experience with this? Because sometimes they'll bring up SOC 1 controls that are good. You want to make sure that helps because that helps keep the audit costs down, and knowing the vendor so you can do the 103A3C audit. That's always important to have that discussion there as well. Okay.
Thank you. These are all really great tips. Vicki, do you have anything to add to this?
No, I think that sums it up. It's all about communication, and when you don't understand what it is your auditor is asking for, sometimes we can't. I always have meetings. Then I'm always like, call me back. We can go through anything, anytime, because it is best. We make sure we have everything, all lined up. I-9 forms, eligibility to test out, and things like that. Those are all huge to have all ready when you're ready to go.
All right, great. Okay, poll number 3. I will get that going. All right, what is important to give the auditors access to? Personnel files, TPA, general ledger.
Got some trick questions there, Jenna.
All right.
Okay, so I can comment on this a little bit. So the personnel files, auditors are definitely going to need access to information within the personnel files to verify eligibility. However, the key part that we wanted to hit here was probably granting auditor access to the TPA or record keeping system. And then the general ledger in most instances is not applicable because it's really the trust statement and record keeping system that the auditor uses.
Okay. And then number 4, what information do you need ready for the field work? Enrollment forms, deferral rate forms, distribution paperwork, or all of the above? All right, we kind of gave you a softball there.
Oh, they're on it. Yep. All of the above is correct.
Okay. So now let's talk about common issues that you're finding. In talking with both of you, you had similar comments in the sense of you see a lot of the same issues and errors pretty frequently. So please walk us through some of the more common issues and how we can fix them.
All right. So common audit issues and findings. The couple of the biggest ones are definition of compensation. This is listed out in your adoption agreement. Majority of clients I see, it is the W-2 wages that is the compensation. Sometimes there's boxes, people do exclude certain wages I've seen, such as bonuses or overtime. So then you want to make sure your pay codes are working correctly for your deferral calculations. Other common issues relate to the inclusion or exclusion of fringe benefits such as life, long-term disability, like maybe uniform reimbursements or cell phone reimbursements. Those are the definition of compensation is a hot topic with the DOL. The next hot topic with the DOL is the remittance policy and off-cycle payrolls. So best practice is to remit as soon as administratively possible. You know, I kind of say if you're able to pay your payroll taxes within 1-2 days, you should also be making your 401k uploads within 1 to 2 days of payroll. If you're always doing 1 to 2 days after, and all of a sudden you have a 15-day, it's kind of an outlier. Not saying that anything's going to happen, because there is a soft safe harbor rule for deposits. You know, it just becomes an issue if the DOL happens to come out and do an audit of your book. So it's just, you know, what's my plan for my upload? And if someone's going to be on vacation, that's the biggest thing. Someone's going to be on vacation or something happens to them. What is your backup plan? Because it shouldn't only be just one person. That will alleviate the timing issues also that I tend to see.
And I wanted to add here, working with a lot of different plans, especially in the new plan area, I see maybe just the unfamiliarity of submitting the contribution. Someone doesn't know how, let's just say on a new plan, your record keeper is more than happy to walk you through, hold your hand as many times as you need with that process until it becomes really natural and quick for you. So hopping on a quick conference call, a lot of times they'll say, just give us a call when you're sitting down to do it. And then they can walk you through the screens. Before you know it, it's just a part of your process that you do every payroll period, and it's really quick. There's even a lot of payroll companies that will do like 180 or 360 integration where they are talking back and forth with you or directly with your record keeper as well. So you can kind of take some of that manual process out of it.
Some other things, vesting. So what I always like to tell people on vesting is maybe take a few individuals quarterly and make sure their vesting is working properly on the match and a profit sharing calculation. Just kind of manually self-check. And also when they're receiving, if someone takes a distribution, I always say to look at the vesting and make sure that the correct amount of forfeitures is being withheld from the gross distribution. The last thing is understand how your TPA tracks the hours. If your vesting is based upon hours or years, it's helpful to know how the TPA tracks those hours in their system, so you know that the vesting is being tracked properly. And a new thing that's come up, because so many things have become electronic today, are deferral feedback files. Normally, I've seen these come out once a week, usually once or twice a week. is they will send you a report. Your chief pay will send you a report that someone went in and changed their deferral rates. So it's finding a system for you that works about when you get those deferral rate feed forms, what is the process to make sure that someone goes into the payroll system and changes those deferral rates for the individual, and what is the double check for that? That's the biggest thing, is when it's not an automatic upfeed, making sure that gets correctly done.
Thank you. Yeah, I mean, back in the day, it was you fill out a paper form, you give it to your payroll person, and now it seems it's the opposite. Most are allowing their staff to make changes either online, through the phone line, or through their record keeper's app. So absolutely, I see that too. Make sure you have a process internally of who's checking it, who's the backup, and you can align the receival date of those files, the feed files, specifically aligned with when you do payroll. If you're always doing payroll on Thursday, you can have the record keeper get that in your inbox every Wednesday or Thursday morning or something like that. And Kris, do you have anything to add to these common audit issues, or would you kind of echo what Vicki says?
Yeah, I guess just one thing to kind of just reinforce maybe just a little bit is on that definition of compensation. Sometimes we can come across small little issues, but we've also seen in audits where it can become a significant issue. You have to remember you need to follow your plan document. Your plan document outlines those compensation provisions, and if you're not following them, it needs to be fixed. It's a big IRS issue. And we've seen some clients, inadvertently not doing deferrals on PTO. And you think of your number of employees that have PTO, that adds up to a significant correction. We've had clients with corrections, up to $300,000 and going back multiple years. So it can be really messy to correct these. So it's always good, like Vicki indicated, look at your pay codes. What is set up to do deferrals on and match on? And just yesterday I was on the phone with a client. We were trying to figure out what was going on a matching calculation, and found out somehow it wasn't matching on catch up. So you just got to make sure the payroll system is catching things appropriately to help mitigate those expensive corrections that come up.
Thank you for adding that. Okay, poll number 5, what is not included in the definition of compensation? Bonuses, overtime, cell phone reimbursements, deferrals. Couple more seconds here.
And yes, that is correct. Cell phone reimbursements are not included in compensation. Your bonus, your overtime, and your deferrals. Well, deferrals would be as long, because they are wages before you get there. So.
All right. And then number 6, what's the timing for the remittance of 401k withholdings? This is a really big one. 8 days, 15 days, 2 days, 15th day of the following month.
All right. Yes, 15 is not correct. I'm sorry. I'm going the wrong way. 2 days. 2 days after you run your payroll, because payroll taxes usually have to be within a couple days, 2 to 3 days after you submit payroll. Your 401k upload should also be just as quick. And I did do the little trick. The 15th day of the following month for small plans is this technically a safe harbor date, but I tell my clients I wouldn't like to push that issue because I wouldn't want the DOL coming in looking at things.
All right. So lastly, Kris, if you can walk us through some cybersecurity concerns. I know this is very top of mind in our industry for record keepers and plan sponsors as well.
Yeah, absolutely. It's really not a big audit topic, but it's a conversation we've been having with clients more from a best practice standpoint. And as there's new audit standards on audit evidence where we're going to need more information on the IT controls and things like that as we move forward. But you got to think about these retirement plans. They are a gold mine for hackers. There's millions of dollars in these 401k plans and a lot of personal information. So I'm going to list out 3 lawsuits that are out there that I encourage everybody just to go Google and read about. There's one with Estee Lauder, Abbott Laboratories, and a more recent one, Colgate-Palmolive. And the Colgate-Palmolive, if you just think about it, you're sitting as a participant with your own 401k plan, or if you're a plan sponsor sponsoring one, and if an employee came and said, I had $750,000 of my 401k balance stolen, what would you do? And what is the action? And that's what happened with the Palmolive case. So look those up. It's quite eye-opening. And then it comes down to whose responsibility is it? So the fraud concerns really come down to who has access to that record keeping system. You definitely want to monitor that and know what's going on. You aren't going to be able to necessarily know the bad actors out there. And we're going to talk about that a little bit, because these bad actors are actually targeting participants that are age 59 and a half, because once you're 59 and a half, most plans allow an in-service distribution. You don't need a distributable event. You don't need a termination date in the system. It's pretty easy. I've actually had a client with that situation, even with paper forms, not an electronic environment, where their record keeper got a paper form. It was a physician practice, and the physician was requesting an in-service distribution. It was signed, but the record keeper knew the physician because he was part of the retirement committee and said, I don't know why he would be taking a distribution. So went back to the plan administrator at the client and said, no, that's not valid. That's not his signature. So it bounced it. That's in a paper world. It was happening too. And it's can happen in the electronic world. But the other area is the unregistered accounts. So this is big for every plan in my mind, especially if you change record keepers throughout the years, that type of thing. You got to remember unregistered accounts, participants or new employees, or if you transfer to a record keeper, your accounts are set up. And they're with pretty basic information that you can log in, and the employee has to go in with the last 4 of their social security or their date of birth or something like that. Well, hackers can find some of that pretty darn easily. And hackers have been going in and looking for these unregistered accounts. And I have another example of that in our client base. It's a larger hospital client, and they had a new CEO that came to town the end of a year, and he did not elect deferrals because he had maxed out at his former employer. So he knew he'd have to wait until January. Well, he got his first paycheck and looked, and lo and behold, there's 401k deferrals on there. And come to find out, after the client investigated a little bit further, some hacker had went in and registered his account, started deferrals, probably in the likelihood that he'd roll money in and they'd have access to the accounts. So that's kind of the back doors that the hackers are looking at there. So just be aware of that. Cyber insurance policies, not required by ERISA, but at best practice. DOL basically says the plan administrator has an obligation to make sure you're monitoring cybersecurity in your plans. So it's a fiduciary responsibility overall. And then just best practices is on the IT side. Get your IT folks involved, monitoring who your TPA is, and what the best way to approach that is getting your record keeper's service organization control report, or SOC 1 report. Is very detailed on the IT controls. Your IT folks are going to know what are the red flags, what's missing, what do you require. It's really that whole vendor management that will help monitor these accounts as well. And lastly is educating your participants on monitoring their accounts. It needs to be a strong onboarding process. Employee, you need to register your account immediately. I tell my clients, ask your TPA, how many unregistered accounts do you have? It's either going to affirm your employees know what's going on and have the proper safety protocol, or you may find we need to do some education there. So covered that really quick, but it's very, very important.
Yeah, I second that. This is a very common topic. In fact, we are going to have a full webinar on cybersecurity later this year. The biggest thing that participants can do is register your account because of the dual authentication, connecting it to your cell phone number, your email addresses, and many of the record keepers we work with have cybersecurity policies where they would make the participant whole if there is any fraudulent activity but you got to register your account. So we're always getting that message out there as well. Thank you so much, Kris and Vicki. This is just, it's been really informational. And I know this is one that we can refer back to in the future. So I really appreciate your expertise. Anybody on the call, you can feel free to scan the QR code, and this will bring you to the registration for our other webinars coming up. We have some really good topics kind of in the works for October, November, December, one of which is cybersecurity. The Social Security one in July is very popular. Feel free to share that with all of your staff. And even if you register for these and you can't hop on live, you'll still get that recording afterwards. So everything can be found on our website, 401kplanprofessionals.com, or our YouTube channel, which is 401k Plan Professionals. And I know it might seem silly for financial advisors to have a YouTube channel, but this is a really great way for us to house all of these webinars and just Q&A videos, and our financial wellness series is out there as well. So this is both for plan sponsors and participants. Thank you. Thanks for spending 30 minutes with us this morning. Here's my contact information. If you have any questions, feel free to reach out. You will get a survey quickly after this to fill out if you have any ideas for future webinars or feedback. We're open to hearing it. All right, everybody, have a great day. Thank you so much. Thanks, Kris. Thanks, Vicki.